So power of sale listings in the GTA have more than doubled compared to last year. In fact, over 100%. And it's people are gambling on pre-construction or buying homes they can't afford, but because renewals are turning into landmines. Some Canadians, and I can't stress this enough, are facing mortgage termination even though they've never missed a single payment. They've paid on time every month, and yet when the renewal date comes up, lenders are running new income checks. They're comparing their documents to CRA filings and saying you don't qualify anymore. And this isn't fear-mongering, it's actually happening quietly, and most of the time, homeowners don't even realize it until the letter shows up. So if you're on a fixed term, a variable rate, or your mortgage is up for renewal in the next 18 months, you need to see what's coming. Because this isn't about getting a bad rate, it's about possibly being told we're not renewing your mortgage at all. So later in the video, I'm going to show you the actual bank policies behind this and explain why it's legal and give you 3 steps to protect your home right now. Banks are turning their backs on homeowners who did everything right. And if you just thought, wait a second, that can happen? Yes, and it's happening right now. So according to data compiled, the numbers of power sale listings in the GTA jumped from 96 in September of 2024 to 204 by September 2025. But these homes aren't all distressed flips or investor fire sales. Many are regular homeowners. And in one case, a couple in Mississauga faced pressure to sell, though they never missed a single payment. What was the problem? Their self-employment income declined in 2023. When their fixed term ended this year, the bank reviewed their updated CRA filings and denied renewal. There was no missed payments, no arrears, just a risk score that no longer passed the bank's internal threshold. Now, you might assume the bank has to renew your mortgage even if you've kept up with your payments, and that's not true. Your bank is under no obligation to renew under the same terms. If your income, credit score, or debt profile has changed, they can, and increasingly do, say no. Now let's talk about the deeper forces driving this wave. And there are 4 major pressure points hitting Canadian borrowers at the same time. First, the interest rate reset. Many Canadians took out mortgages in 2020, 2021 at rates between 1.5% to 2%. Now they are renewing closer to 4% or possibly more. And that alone could mean a monthly jump of $800 to $1,200 for a typical GTA mortgage. Second, banks are no longer playing nice. During the pandemic, lenders were flexible. They offered deferrals, longer amortizations, and emergency support. Those days are over. Regulators have ordered them to reduce risk, and that means reassessing every borrower, even the ones who are still paying on time. Third, CRA-driven income verification. Your lender is pulling out the latest notice of assessment, and if you're self-employed, took CERB, or had a variable income during COVID, your financial profile today may not support the same mortgage. And that's where a lot of renewals are getting denied. And fourth, a silent rise in arrears. And this is where it gets really serious. According to the third quarter of this year, data reported by Better Dwelling, mortgage arrears at Canada's Big 6 banks have surged dramatically. National Bank is up 59%, BMO's up 54%, TD is up 44%. RBC is up 41%. So even the most stable lenders are under pressure. And more than that, RBC's own 90-day plus mortgage delinquency rates show a national surge. The rate across Canada has climbed to 0.31%, but in Greater Vancouver, it's now 0.27%, and Greater Toronto, a staggering 0.42%. And that's the highest it's been in nearly a decade. And remember, these are just the 90-day delinquencies. That doesn't capture everyone hanging on by a thread. These are just the ones already falling. Delinquencies are a lagging indicator. The storm is already here, but the flood hasn't even hit full force yet. Now, here's where it gets even more complicated, the legal side. In Ontario, lenders don't have to go to court to take your home. They can use something called power of sale. It's fast, it's cheap, and it heavily favors the lender. To trigger it, they need to show a default, but that doesn't always mean a missed payment. Your mortgage contract contains dozens of covenants, things like keeping the home insured, paying property taxes, or even notifying the lender about employment changes. If you break any of those, Technically, you're in default, and that gives them the power to act. Some lenders are now digging through borrower files looking for technical breaches because it gives them legal leverage to sell the home and recover their money before the borrower becomes a real problem. Let me tell you about Jordan. That's not his real name, but the story comes directly from a real estate lawyer I spoke with. Jordan bought a modest townhouse in Oshawa back in 2018. He had a fixed rate, made every payment on time. His renewal came up this year. He's a freelance graphic designer. During the renewal process, the bank compared his stated income in 2020 with his CRA assessments and flagged it as material misrepresentation. Not fraud, just enough to deny the renewal. He tried to move on to another lender, but with that note on his file, it was considered high risk. So he was forced to sell, never missed a payment, just got trapped in a documentation gap. And this is what happens when risk scores matter more than payment history. So what can you do to protect yourself? First, audit your documents. Pull your CRA notices of assessment from the last 2 years. Compare them with the income numbers you used on your original mortgage application. If those numbers don't match, fix it now, don't wait. Second, start your renewal process early. Most banks give you 3 to 6 months notice. That's not enough. You want to start looking at your options 6 months before renewal, and that gives you time to shop rates, compare lenders, and fix any red flags. Third, stress test your new payment. Use a mortgage calculator, bump your interest rate by 2.5%, and reduce your amortization to 25 years. That's the worst case scenario. Can you actually handle that payment? If you can't, you need to start looking at options now. Fourth, read your contract. Go find your original mortgage agreement. Look for the clauses about insurance, taxes, employment, and repairs. These are the things that could trigger a power of sale if breached, even accidentally. And fifth, don't wait to ask for help. If your lender says no to renewal, there is still options. You got private lenders, B lenders, credit unions, but the longer you wait, the fewer doors stay open. This isn't just about you or your mortgage. This is about the system. And while we're talking about that, we need to talk about the middle class because I'm genuinely worried, not because about this year, but about what the next 2 years can bring. If home values drop, and I mean drop below what most people paid at the peak, we're looking at devastating wave of financial loss, like equity completely wiped out, life savings gone, and no safety net. If that happens, many homeowners won't just lose their houses, they'll lose everything. And that's not dramatic. That's a reality. It creates a domino effect. Families can't renew, they can't refinance, they can't sell because they still owe more than what the property is worth. This is how a good, stable, working class Canadian gets boxed out of the system. And I don't say this lightly. This is where civil unrest starts. It starts with debt, with broken trust, with people feeling invincible. And the mental health toll is real. You can feel it in the air. People are anxious, they're defeated, they're scared to check their mail, scared to open the banking app. We need to talk about this because if we don't, the pressure is going to spill into every part of society. Family breakdown, substance issues, lost productivity, and worst of all, hopelessness. We have to name it and we have to act on it. The anxiety, the burnout, the silence from politicians while Canadians are watching their lives unravel. No headlines, no bailouts, just everyday people getting squeezed out of their homes by rising rates and paperwork traps. So let's recap what we just covered. Mortgage arrears are surging, up over 50% in some of Canada's biggest banks. Power sale listings in the GTA have more than doubled. Borrowers are being denied renewal, even with clean payment histories, because of documentation, income, or minor breaches of contract. So this is no longer about missed payments. It's about how lenders define risk. And if you've got a renewal coming up in 2025 or 2026, this is your wake-up call. Have you or someone you know had issues with a mortgage renewal this year? Were you asked for extra documents? Did the rate change kill the deal? Leave me a comment and let's talk about it. Like, share, and subscribe, and I'll see you in the next one.